He's right. I want to show you something. Here's a tweet from Mario Sibeli. If you are a small, mid cap, or go anywhere investor, there is an overwhelming amount of interesting things to look at now. Activist, suggestivist, susceptible situations, broken growth, insufficient sectors, and low floats, micro spins, orphaned IPOs, overreactions to misses. In my opinion, there have only been a handful of times over the past 25 years where smaller companies have been qued for fundamentals, value-added selections, and this is one of those times. Completely agree. I actually met Mario Sibeli in person. We were involved in Dover Motorsports. He was an activist investor in Dover Motorsports, and I wrote some articles on Seeking Alpha about Dover Motorsports. And then he one time came to Chicago, and I had dinner with him. And Dover Motorsports was at that time was one of the three small microcap companies involved in NASCAR. The other two was International Speedway Corporation and Speedway Motorsports. And so what ended up happening is what we both thought was going to happen. It just took a lot longer, where Dover Motorsports was bought out by one of the big guys for significant premium to what the stock was trading for. But he focuses on small cap stocks. And, I totally agree, that there has only been a handful of times over the 25 years where a situation like what we're seeing right now is happening. And so, you can take it from somebody that knows, that focuses on the sector, or you can take the other route, like another route that some people take, which is, those opportunities are not possible. You don't know what you're talking about. You said the same thing about this company, and it's never going to happen. You can take that approach, and you can stick with, the index funds or the big names. You will feel good at night. Now you will have some bragging rights, and you're not going to be involved in some of those companies. And some of the things that I'm hearing right now is the same thing that I was hearing before, right? Look at what happened with Oracle, right? I knew about this company, 2014, something like that. I can't even go that low, but at some point, I will never forget this. The stock was trading at 0.015, okay? 1.5 cents, right? And then it ran up to 345. So 345 divided by, 230 times from the bottom, right? And people are focusing on this current sell-off. And when I was talking about Oracle, during these times, and I wasn't involved. I knew about it in 2014, but I wasn't involved in 2014 because Santa Thomas was not in the picture. I got involved in like 2017. But it's the same thing, pie in the sky, it's never going to happen, blah, 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 blah. All these experts in the field, la 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 la. There's this, there's that. If it was such a great asset, everybody would know about it. Same nonsense I hear right now. Or look at Expel, right? Expel is the company that I wrote in my coronavirus book, and like look at this, in like it was trading at like less than 10 cents, like more than 10 years ago, right? 7 cents, 6 cents. Let's take it 6 cents. 6 cents and recent top. 101. Okay? 101 divided by 6 cents. 1,683 times your money. Oh, but it's not possible. You're peddling another pie in the sky opportunity. This idea that you're going to talk about at some point, they don't exist. Blah 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 blah. Aduro doesn't have the solution. Blah 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 blah. Make sure you ignore. Like something like Voxter. Make sure you ignore the fact that we are in the worst real estate market ever. Make sure you ignore that. Make sure you ignore that we're in the worst sell-off since 2009. Make sure you ignore that. Just look at the stock price and then make all of your projections based on that. I want to show you another idea. Moody's. So in 2006, Moody's is a credit rating agency. 2006, it was trading at $72. Then 2008 financial crisis came. Right? It was down almost 75%. Right? And I heard Moody's is going to go out of business. Credit rating agencies are responsible for the 2008 and 2009 financial crisis. So down 75%. Then from that sell-off, from the bottom of the sell-off to the recent top, 2,000%. So it went from less than $20 to almost $400. And by the way, that idea was featured in Why Are We So Clueless About the Stock Market? There was only 4 companies in the case studies that were involved. Only 4 companies that I wrote about. One company was Burlington Northern Santa Fe. It was bought out by Warren Buffett, Berkshire Hathaway. The other companies was Thor Industries. I'm going to show you. Thor Industries. Thor Industries. So 2009 financial crisis, right? The stock went from like 51 to 11. Down 77%, right? I wrote about it here in the book. And then it runs all the way to more than 1,000% return. And even after today's current sell-off, it's up, 700% from the bottom, right? But if you conveniently ignored, let's say if I wrote about Thor Industries when it was 51, some very smart people would have crucified me. They would have told me I don't know what I'm talking about because stock is down 75%. And let's conveniently forget that this was a 2008, 2009 financial crisis. Make sure you forget that. So make sure you forget what's going on right now because it better suits your agenda. But even if I wrote about it at that point, from that point to this point, it would still be up 200%, and it would still be up 80%, right? Just puts things in perspective. But make sure you ignore the fact that we're in the worst sell-off, and just look at the Voxter stock price and make your prediction based on that. Another idea featured in this book was Wells Fargo. So the same idea. At that point, Wells Fargo went from 37 to a low of 8, right? Look at that sell-off. Look at that sell-off. 75%. Something like Wells Fargo, 75%. And look what happened from then to the top, recent top, right? 2018, almost 600%. And even from the worst sell-off back then to the worst sell-off now, 435. But you see, today's sell-off is different because this sell-off is not like the sell-off that was in 2008, 2009, where everything got crushed. Today, people are fleeing to the high-quality companies, and they don't want to touch, the small caps. Today is a different sell-off, right? So that's Wells Fargo. And then case number 4 is Moody's, which is, this company here. And so again, look at things in perspective. Even great companies that are doing things, sell off like this. And recently I was talking with somebody that, was talking about Oracle. Oh, as more drill results come out, the stock price is going to move up. And I said, whoa, hold on a second. You're telling me that the stock price today in any way is tied to the results? And then this person laughed and then was like, that's pretty naive of me. I'm like, yeah, today, nothing matters, right? It gives an opportunity, like what Mario Sibeli is saying, that he hasn't seen anything like this in 25 years, but it's completely disconnected, right? So it doesn't matter. It doesn't matter right now what the results for something like Oracle is going to be. It doesn't matter. Nobody cares about results. People buy stocks only if in the short term the stock price is going to go up. Then they're interested. But results, they don't care, right? It doesn't matter what Aduro publishes, how many hints it gives. It doesn't matter. I'm still shocked that Aduro stock is up since the time I was talking about, but it doesn't matter. It doesn't matter what Voxtra does. They will complain about, related party transactions. They will complain about, covenants. They will complain about this. But when those things get fixed, nobody cares about them. They will complain about that, the stock is not at $5. And then they will ignore the fact that this is the worst real estate market, maybe even worse than 2008, 2009, because the volumes in transactions collapsed. So the prices in certain regions didn't collapse. Like in my region, the price of my house is double what I paid for it in 2014, but there's no inventory. The transactions are down, right? That's what's happening. But people want to forget that. So they'll say, well, but you told us that we were going to go and have a picnic outside. Yeah, but don't you see that it's freaking raining and it's thundering and it's not safe outside? Well, but you told us we were going to have a picnic. Well, that's where we are today. But anyway, you can take it for what it's worth. Going back to this, there has only been a handful of times over the past 25 years where you could have had an opportunity like this. So, you can take advantage of it, or you can, come up with reasons not to take advantage of it. You can cry and bitch all you want, and I'm sure I'm going to hear some very educated, genius comments from some very educated people that will just blow my mind by their stupidity. So please, if you have something stupid to say it in the comments below. Thanks for watching.